Welcome. In this video, will the ZBCN coin rally continue? We will analyze it. Don't forget to subscribe, and please watch to the end to understand. A notable structure can be observed on the chart, a downward sloping resistance curve that the price is attempting to break above. These types of sloped formations typically result from previous price actions and are often referred to as dynamic resistance in technical analysis. Such slopes are usually formed by progressively lower highs, and if the price remains beneath this curve, it may create the perception that buyers are losing strength. However, based on the current market structure, the potential for a breakout above this curve appears quite high, which presents an optimistic outlook for investors. A breakout of this descending curve to the upside could signal not only short-term strength, but also positive indications for the medium and long term. Sloped resistances reflect downward pressure over a certain period, and overcoming such a structure suggests a shift in market dynamics. When this type of breakout occurs, it implies that buyers have successfully overcome the selling pressure and taken control of the market. This serves as a strong signal for the beginning of a new upward trend. The price moving above this curve also means that a psychological resistance level has been breached. In technical analysis, investors often make decisions based on certain lines, patterns, or slopes. Therefore, if the price breaks above this curve, it could lead to increased participation from new buyers. These new entries can make the price movement more liquid and momentum-driven. As a result, the price not only breaks out above the curve, but also potentially enters a new upward channel. From a psychological perspective, such breakouts are highly significant. When prices remain under pressure for an extended period, investors tend to observe the market with uncertainty. However, if the price clearly breaks out above the curve, a large portion of these hesitant investors may shift to taking long positions. This brings fresh liquidity into the market and helps sustain the upward momentum. Additionally, this breakout is seen as a strong signal of confidence for both short-term traders and long-term investors. Once the price moves above the curve, this structure that previously acted as resistance may now turn into support. This is known as a role reversal in technical analysis and is considered a highly positive development. In other words, the price starts using the previously impassable level as a base and begins testing new highs from that point. Such transitions confirm that the market momentum has shifted in favor of the buyers. Historically, strong upward moves have often followed the breakout of such sloped resistance levels. These curves represent accumulated pressure over time, and the moment of breakout releases that pressure, allowing the price to move freely. Therefore, such breakouts frequently serve as the trigger for large, high-volume price movements in a short amount of time. This creates attractive opportunities for investors who rely on technical analysis in their decision-making. At the same time, determining target price levels becomes easier after these types of breakouts. Once a sloped resistance is breached, the direction of the price becomes technically clearer. Fibonacci extension levels, previous highs, or the upper bounds of trend channels often serve as guideposts for investors. In the current setup, if the price breaks the curve to the upside, a move toward these levels appears to be a highly likely scenario. But we can't rely solely on the curve for analysis. Let's also look at other metrics. Stay tuned. One of the most notable structural formations on the chart is the clearly defined ascending channel pattern. This formation is a strong technical signal indicating that the price is moving in an orderly manner within an upward trend. Ascending channels are commonly used by investors in both short and medium-term analyses because they offer high probability scenarios regarding the direction of the price. Especially during periods when price movements remain within the channel boundaries, support and resistance levels become highly predictable. Based on the current technical outlook, the price has touched the lower boundary of this channel and holds the potential to generate an upward reaction from this level. In ascending channel structures, the lower boundary typically acts as a dynamic support. These areas have historically been zones where the price often bounces upward. In technical analysis, such touches to dynamic support levels offer important opportunities for investors, as reactions from these zones can extend first to the midline and then to the upper boundary of the channel. This touch at the lower part of the channel can also indicate that buyers are stepping back in and that investors are viewing the pullback as a buying opportunity. A similar scenario is present in the current chart. Although the price had shown some weakness for a period, it is now displaying signs of recovery after reaching the channel's lower boundary. This lower band touch, especially when supported by volume, presents a scenario that boosts investor confidence and strengthens bullish expectations. If the price moves upward from this level with conviction, the midline of the channel becomes a highly reasonable first target. Midline levels often serve as areas where the price may consolidate temporarily, see profit taking, or enter a new phase of direction seeking. However, if the price reaches the midline after bouncing from the lower boundary, it confirms that the overall market sentiment remains positive. Price movements within such structures generally indicate that the uptrend is intact and that buying opportunities still exist. Due to the nature of channel formations, moves from the lower band to the midline and then to the upper band are highly valuable in technical analysis. The fact that the price is currently at the lower boundary of the channel and is showing positive signals from this area is particularly noteworthy for investors developing long strategies. This area represents not only a technical support but also a psychological one. Since investors have previously seen price increases from these levels, a similar move could attract more interest in long positions. This, in turn, can help accelerate upward momentum. It's also important to note that ascending channels provide insights not only into price levels, but also into the overall health of the trend. The price continuing to move within the channel indicates that the upward structure remains intact, and in fact, is gaining strength. Recoveries seen at critical levels like the lower band show that the trend is based on a solid foundation and has strong potential to reach higher levels. The midline of the channel typically acts as a short-term target. Upon reaching this level, a technical pause or consolidation may occur. However, considering the nature of the current price movements, it appears that the internal movement within the channel is progressing quite healthily, and the possibility of moving beyond the midline toward higher targets is strong. This provides very positive signals, especially for medium-term positions. When analyzing the chart using Bollinger Bands, a significant structure becomes apparent. This structure is known as a squeeze, a condition that holds a critical place in classic Bollinger strategies and can provide strong buy or sell signals to investors. Looking at the current price movements, the upper and lower Bollinger Bands are gradually converging, indicating that market volatility has significantly decreased. It is quite common, and statistically supported, for strong directional moves to follow such squeezes. This squeeze, inherent in the nature of Bollinger Bands, is actually a quiet indicator of energy building up in the market. When the price remains confined within a narrow range for an extended period, it may appear as if the market has found balance. But in reality, this often signals the onset of a significant move. The current squeeze we are observing points to exactly this type of setup. The market seems to be holding its breath, and the move that follows is typically one that is high in volume, decisive, and powerful. In particular, such a tightening of the Bollinger Bands increases the likelihood of what is known in technical analysis as a volatility breakout. This means the price may soon make a sharp and rapid move in either direction. However, if the overall trend is positive and other technical indicators also support a bullish scenario, it is possible to gather strong signals that the likely direction of the breakout will be upward. It has been observed many times that following a Bollinger squeeze, prices tend to break out in the direction of the prevailing trend. We should continue to monitor the Bollinger Bands closely. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.